Good morning, good morning. Good morning, how are you guys? Just reading the Wall Street Journal. Did you hear this story? Mystery trader who made a successful bet that Trump's electoral victory, or that Trump becoming president, earned him $85 million in profit? Wow, that is brilliant. I can't wait to read that story. That is just crazy. $85 million in profit. Wow. I guess maybe he went long DJT. Did you check that one out? No, this didn't even do anything. I wonder what that bet was. I'm so curious now. B1. Let's go to B1 and take a look before we start looking at what I wanted to look at. Okay. Let's see. Trump whale scores $85 million windfall. The mystery trader who made a successful bet on Donald Trump winning the presidency earned about $85 million in profits, tens of millions of dollars more than previously reported, according to a blockchain analysis firm. Research by Chain Analysis shows the trader, known as the Trump whale, had 11 accounts on Polymarket, more than on crypto. Polymarket is a crypto-based betting platform. All right. Trump whale's wagers drew attention last month after the Wall Street Journal reported that multiple accounts on the platform had been systematically purchasing wagers. Okay. Very good. So, guys, today, um, yeah, it is crazy. I think he or she several trades, not a single position. Yeah, Hazar. I like that name, Hazar. All right, folks. So we're going to look at the stock market. We're going to look at some earnings plays that just is happening right now. Some stocks that are just releasing earnings or about to release earnings, and their situation. One thing that we do in our level 3 class is we take a look at stocks that are releasing earnings, because what we've learned by market analysis is that a lot of times earnings will be used to help facilitate something. Okay, so if institutions bought a stock at a cheap price and they rallied price up and now they want to take profits, a lot of times earnings will be good for them to offload their position, right? And you're thinking, well, why would they want to offload their position if earnings are good? Because what drives the market is institutional buying. That's why. Okay, so so they're buying the market, and that's why it goes up, right? As long as there's interest, it goes up. People buy. Retail traders buying, yeah, it may cause a little bit of an influence, but not like institutional traders, right? So when they need to take profit, they need a reason for people to come in and take those positions off of them. So that's why they'll use positive earnings to do that. And so then the question is, well, are you saying that they know what the earnings are going to be? Well, if you were in our level 3 class with us and you saw how many coincidences there are, when price enters into a supply zone and then good earnings come out, right? And then they sell when retail traders are buying, and then price drops into a demand zone, and then bad earnings are released, and then the banks buy at that demand zone. When you've seen too many coincidences, you start to realize they're not coincidences. They just happen way too often. So I'm going to show you some examples today of how earnings can help facilitate a move that was already in play, and how you can locate trading opportunities, amazing trading opportunities. Why? Because we're locating the buying or selling by the institutions before the earnings come out, or right after the earnings come out. Okay? We can anticipate what's going to happen based on what price is doing. All right? So first, as we always like to do, we always like to take a look at the S&P and just get context, see where things are at. And we can see we're in the same situation as we were last time we checked in, right? We have this area here that was a specific area that we were watching for, and that got ripped through with this ginormous move to the upside. And so I'm watching this area here for a pullback, and this is an area that I'm going to be buying this this index, okay, for a move higher like this. So right now we're pausing. As you can see, we have basing, and so within that basing, what do you have? Lower time frame ranging, right? So if you go down to the 2-hour chart, it may not be low enough, but let's take a look. Yeah, so we have something like this. We have demand here, and that's it, and demand here. Okay, so this is basically the ranging that we have right here. Now what's going to trigger this drop, because we got the expectation that price is going to drop down, we need this demand out, right? And then that will help facilitate. And probably whatever supply is created will probably be used to drop price down to that area. But this is what the time frame I'd be looking at in terms of timing this move to the downside. If it happens, if demand holds, price will continue going higher, okay? So we got a market that's very bullish. We got a market that is being bought up by the big institutions. There's no doubt about it. No doubt about it. Just yesterday, I was driving down to the city to play in my pool league, and I was talking with some friends. And one guy who is a friend of mine likes to surf the internet, and he likes to see what people are saying about all sorts of different topics, and one of them is the market. And he said, I watched this video where a guy was saying that there's going to be a big move, man, a big move in the market. We don't know, but it's going to drop. It's going to drop heavy. Some are even saying this amount, 20%, this and that. I said, listen, it's not going to happen. As far as what's happening on the charts right now, it's not. There's not even one little sign. But you see, an amateur could easily fall for that because they don't know what they should be watching for on the charts. When we are locating institutional buying and selling on the charts, and we are locating the trends that the institutions use to propel price higher, then you're looking at raw, solid information. Nobody could tell me anything different. If the world's greatest market expert, whoever that person is, came up to me in a candid conversation and said, hey Kev, this market's going to drop 20%, I'd say, okay. Well, when I see that happening on the charts, I'll believe it. But right now, there's no sign of it whatsoever, okay? We have an upward trend on the weekly chart. Demand just got hit, pushed to the upside. There's no sign of that whatsoever, okay? So we're upward trending. We may see a short-term retracement, but that will quickly be bought up, and we'll see a continued move to the downside. So just remember this idea of what is likely going to happen, okay? Because when we go to the Dow Jones, it's a similar situation. Everything is upward trending. We might see a retracement, but after the retracement, we'll see price continue. And same thing with the NASDAQ, okay? The NASDAQ, the story that the NASDAQ is telling me is that we'll likely see a little bit more ranging here before a retracement. If the retracement does take place, it could be more ranging and then a move to the upside for sure. But ranging, meaning more time where the market is not doing much, possible retracement, maybe 60 to 70% chance of the retracement, and then after retracement, 80 to 85% chance we're going to see the market explode to the upside, okay? So with this in mind, now we're going to look at these earnings plays, right? One of them is Occidental Petroleum. And one interesting thing that I marked on my chart is where Warren Buffett got in. Warren Buffett's average price is here. We're below Warren Buffett's average price right now. Well, pre-market, we're a little bit up, so it might be up a little bit. So, I mean, if you wanted to get into this stock at or around the same price as Warren Buffett, you're at that price right now. And the interesting thing is that when I saw the news that Warren Buffett bought this stock, immediately I thought to myself, why would he buy this stock as price is reacting to a supply area? Okay? Remember, supply and demand rules the markets, period. Okay? You can deny it if you want to deny it at your own peril, but it's how the markets work. I am telling you, and that's why I do these shows, is because I like to prove it over and over and over again so you guys see what we're talking about. So he bought it and price goes up, right? But you see how it stalled here and did not go higher? You see how it's coming down? Right. Do you know why? Because this is a supply area that's being contacted, okay? This area, $80, $70, this is a massive supply area. So price comes into supply, we typically see drops form from there. And so that's what's taking place here, okay? But you see how we're also coming into this area here? Yeah. So don't be surprised if over time you see Occidental Petroleum start to increase in value from here, okay? So with that being said, we look at the earnings because, as you know, we're watching as price is dropping down into a demand area. Now, up at these highs here, this is where Warren Buffett, okay, was buying up here. And so it came up, it hits supply, and look as it was coming up and hitting supply, positive earnings, okay? Then it hits supply for negative earnings, continues sideways, positive earnings. This is supply being hit. This is where typically big institutions, you know, close off positions. Positive, 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 price starts to decline. So now we're coming into our buying area. And so we just had earnings being released, positive again, okay? So over time, watch this one. Watch to see if this is going to start curling off, because this to me is the buying area. And I'd expect to see this, okay? Once it reacts to the upside, it needs to eat through all the supply that was here. Once this area is taken out, then easily long-term target 106 can be reached, okay? So that's Occidental Petroleum. Here's another one. Skyworks Solutions. So they just came out with earnings, positive earnings. Here's what I'm talking to you about, okay? So here's a monthly chart. And as you can see, we contacted some supply here. And previous to that, we had demand here being contacted. Okay, so here's the deal. We have demand that holds price from the lows and supply that continues to push price down every time it reaches it. It reached it here and then just fell short of hitting it here. So what do we have? We have a situation where the last area of buying or selling was supply. So selling was the overall pressure on price, causing it to go down. And as it's dropping, we have positive earnings. Okay, look, positive earnings. Not very good. Your typical person would be buying at this stage, and it hasn't yet hit that demand area. So if they were to buy with positive earnings, it's likely price is going to be dropping, okay? And what happens when you buy with positive earnings and you see price drop? You start to freak out, and it doesn't make sense. Why would it drop? If the earnings were good, why would it drop, right? And then you start getting confused. Should I hold the price? Should I hold this stock? And who knows, maybe some bad news will come out. You know, I'm not just tossing ideas. I'm tossing out things that I've seen with my own eyes, okay? I put myself in the shoes of the retail trader experiencing this situation. And I'm thinking to myself, what would they be thinking right now? And then you look at the news and then they have some bad headlines. And it's like, wow, positive earnings, the stock drops. And then bad headlines, I don't even feel like being in the stock no more. And then that's when demand comes into play. They offload their position, and then banks come in and start buying. So pay attention to that one with SWKS. Disney. Good earnings, apparently. Look at the gap up, okay? So obviously they're expecting people to buy Disney with that positive earnings, okay? And no wonder, if you look at the higher time frames, what was the last zone that was contacted? We had demand first, rallied up, supply second, back to demand, now rallying up. Okay, so are they going to continue pushing price up to eat through this area and head higher? We don't know that. What we can look at is the lower time frames to see what is taking place. And if we look at the weekly chart, this is what we've got. We got a lot of room for price to go up to the next area of supply. This is the next area of supply where I would suspect price is going to stall because they'd have to remove it in order to push price higher. So if price is gonna continue going higher, here's the significant buying area that I would be expecting to hold. Meaning, if you're gonna go into a long position, this is the roadblock that if price was to turn around and head lower, it should stop price from dropping further and continue. If price was to drop down from these highs into this area, this would be a good place to logically enter a position. You can't just buy and not know where your stop losses go, right? You have to have logic behind what you're doing. There has to be logic and reason behind what you're doing. If you don't have logic, if you don't have a system that's based on something logical, then how can you see whether or not the logic you're applying to the charts is good or not, right? It makes no sense. But banks are buying. This is the last area of significant buying that we can see on the charts. So if you're going to be basing a long trade on something, it has to be on this zone holding here, okay? So your stops would go below it and rally here, and your targets would be that supply area. So it's not a bad move if price was to go down. Would I buy it now, halfway up? Not really. But if I was looking to hold this position for a long time, okay, look, if this move happens, that's a 34% increase in your holdings. That's great, okay? Because that could easily happen in a year or so, okay? You invest money in the stock, and then a year later, it's up 34%. That's a great return. All right, you buy options, you can make a lot more than 30 to 34%. All right, but the idea is, you know, it all depends on what kind of forecast you're putting on here. And again, forecasts have to be based on something. You know, when I look at Disney stock, you know, yeah, I would love to say I think the stock's going to go to 180. You know, when I see these so-called experts say, oh, Disney stock is looking good to go to 200, it's like, you can't say that. I mean, I know you can say that to amateurs who don't know what they're saying, but when you know the institutional buying and selling that's been taking place on the charts, and you know how the price is going to react to these zones, you can't say it's going to go to 180. You just can't. You can speculate, but what you're saying is that you know for a fact when price hits this area of supply, it's going to continue going higher. And when it hits this area of supply that's never been tested before, it's just going to keep on going high. You don't know that. You don't know that. What are the chances? The chances are when price comes up to this area of supply, it's dropping. Okay? That's the chances. Very, very likely. And then how far it's going to drop? There's ways to tell, but I won't share that with you in this session. But there's ways to tell. And but, you know, you can't say it's going to go to 180 because if it came down to a demand zone on a lower time frame and remove that area of demand, then guess what? It's likely going to go lower. So where do you put your stop loss, right? You have to have logic behind what you're doing, okay? If there was no supply here and price came up and removed this area, I'd say, yeah, easily 180, no problem. Because those are the chances. The odds are that because there's no selling there by the institutions. So I have logic and reason for selecting that target. I'm not just tossing out a target like I see people doing all the time. No, it doesn't work that way, okay? So latest area of buying right there on the weekly chart, okay? And but that supply at 140 means that you're looking at a target of around this area here, okay? So now you know where the logical move is going to be, okay? When you know that, you see where price is. It's up here. If you put your stop loss here, that's more than a one-to-one trade. I don't do one-to-one trades. That's nonsense. That's just, why would I risk so much money just to make, you know, one-on-one of that risk? It's no. If price came down here, yeah, I would. Why? Because take a look at the risk to reward on that, okay? You know, 1 in 8 or something, who knows, right? 1 in 8, 1 in 10. but a nice increase if that were to happen. So just pointing this out, we have significant demand here, propelling price. We just had it confirmed with buying here, and we're gapping up. If it comes down, remember what I said about the S&P? You see why it's so important to see the indexes? Because the markets are typically influenced by the index, the moves of the index. If the indexes are dropping, guess what happens to the stocks? Likely, depends on context, but context meaning we're gapping up away from demand right now, right? Isn't the indexes moving away from that demand area I showed you? So if the indexes retrace to demand, there's a good chance that this retraces to demand, okay? And then you wait for your long signals, bada boom. A year later, you look back and you're like, oh, 34% increase on my shares. Yeah, there you go. That's how you apply logic to the charts to get winning trades. That's why we've been very successful in trading the stock market, is because it's the logic that we apply and it's working like magic. AMAT, we have the trading view says November 14th, but according to investing.com, I think it's just coming out tonight or something. But be careful, okay? Because it could be a positive earnings. The chart's telling me it's going to drop, okay? The institutional buying and selling that I see on the chart and the area that price is in right now, we're likely going to drop, okay? So, but watch that. I tell you this so that you see it with your own eyes, so that you understand why I'm sharing these things, okay? This has more room to drop. Could it move up a little bit because of positive earnings? Sure, whatever. Check it back in 2 weeks or 3 weeks and see what happens, okay? CPRT, I'm going to let you in on a little secret here, okay? Some of you always come out and say, why don't you give us a trade? Give us a trade. All right, I'm giving you one now, all right? But I'm not a financial advisor. I'm not giving you financial advice. I'm not telling you to buy or sell anything. I'm going to share with you a trade signal that I am witnessing on this chart. I love this chart. We just recently were looking at this chart in class, and it's setting up for a beautiful move. And so I was looking at the daily chart, and I told my members, I said, this area here is a key area that for me needs to be removed. Once it's removed, I'm going to be interested in going long this stock. Okay, CPRT. So they have earnings coming out on the 21st. Is that true? Let me see. That's not what investing.com said. Earnings calendar. This week. Thursday. Oh, it doesn't say morning or night, so I don't know what's going on with that, what that means. But anyways, earnings are coming out. Earnings are coming out. But here's what I was trying to teach you before, okay? So you see that? It's red. Why? Because it's either negative earnings or mixed, okay? This was negative earnings, okay? But I want you to understand that when it was negative earnings, retail traders were offloading their positions while the institutions bought. Okay? You see how that works? Okay. Then positive earnings, right? Institutions were taking profits on long positions. Okay? All right. Then negative earnings again. Guess what the institutions were doing? Buying the stock. So negative earnings came out, and then they offloaded it because they thought, oh, bad earnings. Then they bought. Okay, rallied up. We'll see what happens here. But the institutions are buying right now. They just removed this key area that I wanted to see removed for more upside. And so now I'm going to be watching to see any new demand coming into the market. And when that new demand comes in, I'll be locating the area and buying. Right now, we might have an ascending trend line, something like this. Not really like that, but okay. Uptrend. And we might have something in around this area here, okay? But the removal of this is the signal for me, okay? I'd like to see another candle close above this this area here, 57.95, give or take. Another candle close, retracement, I'm buying it, okay? That's what I'm doing. All right, somebody left some messages. Very interesting supply and demand strategy. I would say the best one comparing to all the nonsense out there, without a doubt. Without a doubt. Obviously, I have a biased opinion, but the supply and demand analysis that we do is nothing like what you see out there. I sometimes look at what other people are doing and I laugh because it's not even close to what we're doing. The amount of accuracy and understanding that you can have based on the concepts and principles that we teach here at the school is unmatched. Institutional demand and supply till thy kingdom comes. Can we take a look at US? Oh, we're not going to look at US dollar Japanese yen today. I tried to get into your Telegram, a message with no response. Well, it depends. Did you follow the rules? The rules are go to our website, go to the chat function on the bottom of our website, and put in a request. If you haven't heard back, just give us a minute. We have a lot of people, okay? Go to the website. Here's the Contact Us tab. Click on it and say, hey, I'd like to join your Telegram channel. Here's my Telegram name, and I'd appreciate it if I could get in. And then just be patient, okay? Because we have a lot of requests. But if you haven't noticed, it's been really quiet in the channel, right? In the chat, we used to get a lot of scam artists trying to reach out to people and posting links and trying to scam our chat members into giving them money and stuff like that. So I couldn't have any of that crap. I said, no, that's not going to happen. We're going to kick these guys out. So we did the best we could to kick them out. And now we have this process for people to sign up, okay? So that we can vet them, make sure that whoever's in the chat is legitimate. Okay, guys, that's it. That's it for me. Hope this was helpful. A lot of information I passed on to you. Use it wisely. CPRT. I'm looking to buy it very soon. This one's going to skyrocket. Okay? Big institutional buyers coming into this market. And I got targets at 66 bucks. Okay? Conservative targets. I think it's going to go much higher than that, but conservative $66. All right? Thank me later. Make some money on this chart or whatever. Don't take my advice. I don't want to get in trouble. But when you make money on my advice, or sorry, no, not advice. If you ever make money on what you're learning from me, then look to invest it at our school. Get some education. You'll be thanking me later for it, okay? All right, guys. You take care. Have a good one.